This is a guaranteed capital raise, and that strikes some people as a little awkward, like that sounds too good to be true, but it's not. The three of us that formed the model, we all came from the SBA. We've worked with small businesses. We've helped small businesses in our communities raise tens of millions of dollars on an annual basis. So what we know is that we need to identify the right source of capital based upon a small business's mitigating circumstances, and we need to help them meet the underwriting criteria. So in other words, if they have the credibility for the type of funding that they're applying for, they get approved and they get funded. And if they don't, then we need to, of course, fix those variances, those gaps, otherwise they won't be approved. It's really no different than buying a house. There's no magic to it. What happens when you want to buy a house? Well, you go through a mortgage broker or a bank. They're going to look at you and your circumstances. They're going to look at the specifics of the property. And based upon all those variables, they're going to identify, well, what's the right type of mortgage? Is it a USDA, a FHA, a VA, a jumbo, or what have you? There's many different types of mortgages. Well, when it comes to raising capital for small businesses, there are many, many, many different sources of capital, and it's not one size fits all. So what we're going to do is work with you through a process. And the process starts with a simple form. You're going to fill out this form right here to be considered for this program, and then you'll hit submit or send. If you want to also see a flyer about the program, you can download the flyer here at the bottom of the page. There's an explanation of all the fields that we've asked for, so you can easily see that. But let's talk about how the program works, and then of course you can see here the key benefits, which we'll go through in a moment. But what we're going to do is we're going to start by building a loan package. The loan package is over a 4-week process, 28 days. We're going to have an educational lesson each week to help you build your financial literacy so you're better prepared for this capital raise. And then secondly, we're going to be gathering data that's needed to identify both what's the right source of capital for your circumstances, and then to have what's needed to actually apply for it to get approved. So rather it be an SBA loan, line of credit, business credit under your EIN where there's no use of personal credit, company car, real estate, whatever, it doesn't matter. The process is the same. 28 days, 4 weeks of gathering data that's needed to put together that loan package. And at that point, then our funding committee will review and then be able to make recommendations of where we should go get the funding, because again, there's not just one bucket or one source of money. We need to go to the right place based upon your circumstances. So the benefits are great. What we are so confident in, even though there's no upfront cost to you, now that doesn't mean it's a free program, because it's not, quite frankly, and I'll share that with you in a second. But we do guarantee at least $100,000 capital raise. Now, that doesn't mean that's the most you can get, but we can promise that any small business owner, we can help them raise at least $100,000 through this process. Part of the secret sauce is recognizing that there are 3 different categories of capital, and there's only 3 that exist. So if a business wants to grow, you either have to get the money from one or more of these 3 areas: debt-based capital, equity-based capital, or earned income. Debt-based capital is where we borrow money and we promise to pay it back. And again, that can be like an SBA loan, a line of credit, or what have you. Secondly, there's equity-based capital. That's money that you don't have to pay back. Now, obviously, it's not free money. So instead, what the resolution of that is, instead of a repayment plan, it is a sharing of future profits. And that may be comfortable or not comfortable for you. That's fine. That's just one of the 3. And the third is earned income. And that just simply means where there's more revenue coming in than expenses, and there's money left over to inject in. We actually have proficiency in helping small business with all 3 of those. And so we'll go through the 4-week process to figure out what we would recommend is best for your circumstances. Ultimately, you can choose, and we can leverage 1, 2, or all 3 of those. We can pursue debt-based capital, money that has to be paid back, equity-based capital, money that doesn't have to be paid back, and or earned income, where we're injecting extra capital. We actually have what's called an opportunity fund that can inject up to $10,000 a month into your business account to generate more earned income. So the bottom line is we can help you raise at least $100,000. We guarantee that. We promise that. We put that in writing in the agreement. It's fast in the sense that we're going to start with that first step of building the loan package out, which takes, we say 30 days. It's technically 28 days, just less than a month. We've talked about there are many different sources of capital, and what's often overlooked, there are some sources of capital that only report under the EIN, so under your Dun & Bradstreet, your Equifax business, your Experian business. So your personal credit's not even part of the underwriting. So it's not true for all types of capital, but there are some types that are like that. What's really nice about this program is that there's no minimum time in business to qualify and no minimum credit scores. And again, there is no upfront cost. So instead of you having any out-of-pocket cost and any risk, we essentially are paid based upon the results. And primarily what that means is we're paid just like a realtor, right? If you hired a realtor to sell a house, normally you would have 6% cost paid to realtors at closing. So in our cases, we help you raise capital, whether it happens in one tranche, one round of funding, or multiple tranches or rounds of funding. You promise to pay us 6% for the work that we've done. Now, again, we have all this in writing, a DocuSign agreement, and we'll send that to you.